there are some really interesting, exciting, and even encouraging trends that I'm seeing in the market today that I'm really, really excited to share with you. But there may actually be a catch, and I'm going to tell you all about it. Happy Wednesday, everybody. It's Brian Simmons here with eXp Realty in Southern Oregon. It's August 31st, and I am super excited because it's officially my favorite time of the year. We've got football, we've got hunting season, crock pots, cooler weather is hopefully coming soon. If you could do me a quick favor, I'd really appreciate it, and just click that subscribe icon, hit the like button, and share this video with anybody you know who may be looking to buy or sell real estate in the Southern Oregon market. And if you're looking to do some house hunting or you want to know what your home's worth, there's some really, really great links in the description of this video and some additional resources for you to check out. So take a look at that. Now, let's run through the data for Jackson, Josephine counties looking at the last week. Okay, for single-family residential homes, we had 1,245 active single-family residential homes on the market, down from 1,281 last week. So pretty good drop there. 88 new listings hit the market, which is the lowest of the year since the first week of January. Actually, it's the only week we had lower. 156 price changes, which is below our 6-week average. 46 came back on the market. 132 went pending, which is way above our 6-week average, and the highest number we've seen since May. 77 closed, 46 were expired, withdrawn, or canceled, and that all brings us to just over 16 weeks worth of inventory if we were to look at just a snapshot of that 1 week. So there are a lot of different trends going on, a lot of different stuff, and a few things jumped out at me trend-wise that I wanted to share with you. First is that inventory continues to decrease from its high that we saw earlier in the month of August. And we've now shaved a full week off of inventory. We were up over 17 weeks worth of inventory. We're now just over 16. Okay, so full week of inventory shaved off. New listings have gone way down to the lowest number that we've seen since the first week of January, as I mentioned, and that is substantial. Pending sales also went up above our 6-week average and actually above 10% of available inventory. So another way of wording that is more than 10% of their available inventory went pending last week. And if you've been watching my market report long enough, like I'm sure you have, then you will know what all this means, right? So if supply is trending down and demand is trending up, those are signs that indicate that we're moving towards the direction of a stronger seller's market with higher home prices. But, and of course there's a but, as much as that looks good on paper, I feel much, much better about it if we saw mortgage rates starting to decrease. And they've been doing the opposite in the last couple weeks. And I did post an article about that on my Facebook page, which if you're not following it, you should be. It's facebook.com/theeducationalagent. Check it out, follow me, like it. It's good stuff on there. But I posted a article on there that says that Fannie Mae is predicting mortgage rates will be in about 4.5% in 2023. As a point of clarification, Fannie Mae isn't some random character that predicts when mortgage rates are going to fall, similar to Puxatawny Phil, who predicts when spring is coming. Totally not the same thing. Fannie Mae is Federal National Mortgage Association, which is a government-sponsored entity. So whether that means they know anything, I'll leave that up to you. Anyways, we need to get back to that level of rate that they're predicting around the 4.5% mark, in my opinion, if we want to have a stable, healthy housing market that produces stable gains for homeowners. And not just stable, but reasonable, okay? We don't need to necessarily be back at 2.9% mortgage rates, as much as I know a lot of people would love to see that because it's much more affordable, but that overheats the market and leads to 20% gains, which are probably not the most sustainable thing, probably not the healthiest thing. So if we get to like a 4.5% mortgage rate and we were seeing gains around like 3 to 5%, that would be great. That's sustainable in my opinion, and something we could just kind of lock in for the long term. And to give you a sense of numbers, a 5% gain on a $500,000 home is $25,000. So if you have a $500,000 home and you're getting a 5% appreciation of 25 grand, that's pretty good in terms of generating long-term wealth. So I wouldn't be opposed to that myself. Now, What do I think's coming over the next few weeks? I think next week's actually going to be pretty low in the numbers just of new listings and of pending deals. And I think that because it's Labor Day weekend, and that tends to, in our market, holiday weekends tend to have a lot less activity. 4th of July was one of the lowest weeks we had in terms of new listings and pendings. It's just people like to get out and go camping and do those sorts of things in our market. Other markets, it's a different story, but here that's how it has proven to be. I also think that it's going to especially be the case because it's kind of the last hoorah before really getting to the full swing of things with school starting. People locking up their weekends with hunting for all those hunters out there, and all that good stuff. So it's really, I'm not expecting there to be a lot of activity this weekend, but it could happen. So I see it being a slow week, obviously, but after that, I believe we're going to start really chipping away at the inventory number. We had a lot of good pending activity in the past few weeks, so that should obviously translate to a lot of good closing activity, assuming those all stay together. And that should eventually, in my opinion, if we continue to get good pending activity from buyers, we should see ourselves get back below 10 weeks of inventory or right at it before Halloween. And that's crazy to be using Halloween as a reference point, but that is only like 2 months away. So I'm going to say by Halloween, we should be about 10 weeks worth of inventory. That's my big, bold prediction. We'll see what happens. So that's what I'm seeing in the data. I really hope that helps you to understand what we have going on here in our local Southern Oregon real estate market. If you are looking, again, to buy or sell a home, I'm more than happy to help you. If you want to do some house hunting or see what your home's worth, please check out my website, buyingsouthernoregon.com, and you can find all those resources there, or in the description of this video, there's some great resources as well. And please don't forget to click on that like button, hit the subscribe icon, and share this video with anybody you know who is looking to buy or sell real estate in the Southern Oregon market, and I'll be more than happy to help them. As always, if there's anything in the world I could do for you, please don't hesitate to reach out. I hope you have a great week, and I will see you next week.